Today we have a repeat customer for our lender spotlight, Shant Banosian of Guaranteed Rate Mortgage. Welcome.
Thanks, Dennis, for having me. Always a pleasure.
Great. Thanks for being here. So, one of the topics that often comes up when we are talking to potential home buyers is this idea of renting versus buying. A lot of renters somehow think that it's more financially advantageous for them to keep renting, whereas sometimes it might be better for them to look into the advantages of a mortgage and purchasing a property. So why don't you talk a little bit about that?
Yeah, of course. I think one of the greatest creators of wealth clearly has been homeownership. The average homeowner over the course of a 10-year period has 20 times the wealth versus somebody who stays renting. So it's a massive, massive disparity. And if you look at like as they kind of categorize buckets of wealth, in terms of like whether it's the top 50%, top 20%, top 10%, top 1%, generally that biggest creation of wealth is through real estate ownership. So there's a lot of reasons why. There's the benefit of owning something that's going to appreciate. So when you own an asset like real estate, the power of leverage is pretty amazing in the sense that you own the asset even though you're not paying for it in cash, right? So most of our clients, obviously, if they're talking to me, they're getting a mortgage, right? So if you're putting down 3% or 5% or 10%, and you're buying a $600,000 house as an example, your appreciation is on the entire 600,000 of the asset. So for example, if you buy a house and put down 5% as a first-time home buyer and put down 30 grand, right? And that house appreciates next year, you've by 5%, now that house is worth 630, right? And so you've made 100% appreciation on your cash into the purchase transaction just in 1 year. So you put 30 in, now all of a sudden the asset's worth 30 more, and that compounds over the course of time. So there's home price appreciation, which over the course of time has been proven to always go up. There's obviously ups and downs, but if you own a house for a relatively reasonable amount of time, generally speaking, you're going to do very well. And I think that's getting more and more in the case of with low inventory being the case for years and years and years, and projected to be the future. We think that home prices are going to continue to go up. So there's home price appreciation itself. There's also two other components. One is amortization gain. So what I mean by that is when you pay principal, that's forced savings, right? Every single month you're paying principal and interest, and you pay principal, you're essentially paying yourself back. With every single payment, you own more of that house. So it's a lot like putting money in a forced savings account, right? And then the second part is you're paying interest, and property taxes, which are largely tax deductible. So when you're paying rent, unfortunately, you are paying a mortgage, but you're just paying somebody else's mortgage, and they're reaping the benefits of it, and you're not getting any of those benefits. But largely, the big reason being is the appreciation, the principal pay down with the amortization gain, and then the interest deductions. So there's a huge, huge gap in terms of wealth and assets and all that kind of stuff between people who own real estate versus people that do not.
Now, what kind of assistance is there for people that can't come up with a big chunk of money up front for the down payment to kind of pare that down?
Yeah, there's lots. First and foremost, one of the biggest misconceptions is that I have so many clients that call me that are first-time home buyers that assume they need 20% down to be able to buy a house, and that couldn't be further from the truth. There's so many great down payment options out there through different programs like Mass Housing, Fannie Mae, Freddie Mac, FHA, VA, all these different and so on and so forth that can allow for as little as 3% down or 5% down. On top of that, there's down payment assistance programs through Mass Housing. There's down payment assistance programs a lot of times through the towns and municipalities that offer gateways into homeownership. Last year, the state of Massachusetts rolled out a program that was obviously gobbled up pretty quickly because it was so popular. But they put out almost $65 million in down payment assistance program, which was really amazing. So that's that money's run dry, but stuff like that comes and goes. But generally speaking, there's also other options out there. There's also what a lot of our clients do, especially first-time home buyers, is that unfortunately, where we live in Boston, in Greater Boston, when you come out of school, if you have student loan debt or if you're paying rent, it's generally expensive. So a lot of times we have a lot of borrowers that have great credit, and really great income, but that don't have a lot of savings. However, a lot of times they are saving without even realizing it in things like 401ks and IRAs. And a lot of our clients will utilize their retirement accounts to make their first purchase. And I'm not recommending that anybody pay taxes or penalties to withdraw money from their IRAs and screw up their retirement. However, there is programs out there that will allow you to withdraw 10K out of an IRA penalty free if you're purchasing, a home. You can take out a loan against your 401k where you're essentially giving yourself your cash to utilize to buy another asset, right? Like, it's not like you're taking the money out and going on a vacation or buying clothes, right? Like, you're putting it from one asset class to another asset class, plus you're paying yourself back, your retirement's still growing, things like that. So there's a lot of really great options out there for first-time home buyers right now. And I think the big key, even if you don't find your dream house, I think part of it is just like with that first purchase, it's really just getting into the market.
Mm-hmm. Now, I know a lot of people are a little bit nervous right now because interest rates keep sort of creeping up. So what's your advice to someone looking to get into the real estate market now with the rates?
Yeah. Certainly, as a mortgage lender, I don't like when rates go up. Like, I'd prefer the lowest possible rates out there. It creates more affordability, all that kind of stuff. However, it actually creates a great opportunity for buyers out there, because what happens is, when rates are very, very low, like they were in 2020 and 2021, it becomes very difficult to buy a house. There's so much competition. There's bidding wars. There's wave contingencies. There's a massive fear of missing out, because so everybody gets in and mortgage applications go through the roof. And that's when we were hearing the stories of, people like, 25, 50, 60 offers on houses. When rates go up, it takes some people out of the buying pool. Mortgage applications tend to go down. So it's counterintuitive, but it's actually, in my opinion, easier to buy and more opportunity to buy at a better price when rates go up, because it eliminates some of your competition. And the cool part is that, when you buy, especially in a state like Massachusetts, where refinancing is not cost prohibitive, it's actually relatively easy and cheap. You can buy now, buy the house at a better price with less competition, actually win your bid, right? And then refinance later when rates come down. And we do anticipate rates to we think rates have peaked. We think rates peaked about last October, November, and again this February. And we do think they're going to start trending down. But I would caution you not to wait until they come down even further, because as they come down, while we stay in this low inventory environment, more people will get into the market, and that will drive home prices up. So if you can get in now and refinance later, I think that's a great strategy. And I also think that, what you should also do as rates go up, you do lose some buying power because it becomes a little bit more expensive. Your monthly payments go up. So you should look at some of your other finances, right? Figure out where you can eliminate other expenses in order to, because, some of the other expenses are just nice to haves, or you can figure out ways in order to borrow at cheaper costs, and maybe student loans or car payments, or maybe buy something a little bit smaller so you can put more of your money towards a house, which is an asset, which is an investment, which is a wealth creator, like we talked about at the beginning of this conversation. So you might have to make some sacrifices somewhere else in order to get into a house now, but it'll totally be worth it in the long run. You won't regret it.
And so finally, we're coming up to the summer season. Any predictions on if the market will continue to produce more inventory, or it's going to slow down a little bit? Or
my prediction is that this summer is going to be a lot like last summer, and that we'll see a little bit of a slowdown. I think July and August are going to be quiet like they historically have been outside of 2020 and 2021. As a reminder, 2020 and 2021, we were still in the grips of that pandemic, right? And there was a lot of vacations that got delayed or didn't happen. So last year we saw things really slow down, because it was the great vacation, I call it. Like, everybody went on vacation at the same time. And I think you're going to see a lot of that this year as well, because in general, the economy has been pretty good. So people are spending. Vacations is one thing that they tend to go on. So I think if you stay in the market as a buyer, I think it'll be smart, because you'll also have less competition. I do think personally this fall is going to be more busy, much busier than last fall. Last fall, we had a cycle of rates go from 3% at the beginning of the year to 7%. People paused and stopped and tried to figure out what was going on. This year, the opposite's going to happen. You're going to see, I think, rates kind of continue to trend down. So you're not going to have that pause. Actually, you're going to have that jump back in. So I think this fall is going to remain very, very competitive. I think the summer will be a little quieter, though. I think we'll be busy all the way through the end of June, like right through July 4th. And then you'll see a pullback in July and August. Then after Labor Day, you'll see things pick right back up again.
Right. Well, wonderful to have you, Shant Banosian, Guaranteed Rate. Thank you for joining me today. Thank you for taking the time.
Yeah, my pleasure. It was great.
Right.
Thank you so
Appreciate
much.
everything you do for Century 21 Shelley, and uh, have a great afternoon.
You as well. Thanks, Dennis.